Hello, everyone, and welcome back. It's Mwelwa again, and I am on the sidelines of the Twazabuka Zambia Sugar announcement. The project itself is a massive project for Zambia Sugar. They're now going back into project phase after several years, and with me to tell me about, the financing structures behind it all is the money man, the CFO, Mr. Hezron Musonda. Hezron, how are you?
I'm okay, Mwela. Good to see you again.
Yeah, it's always a pleasure. We always meet at these particular events, and I'm always curious about the numbers.
Definitely, I know.
Absolutely. But anyway, let's just get straight into it. You have made the presentation regarding the sort of funding that this particular project will actually require. What was very curious is that you also mentioned that there'll be opportunity for financial institutions, much to their delight, for them to participate. Viewers will remember that, at the end of 2024, the financial year results indicated circa 2 billion kwacha profit after tax, and everybody was just thinking, will Zambia Sugar ever go back into the market? Tell us about the thinking about that capital structure you presented. How much is involved? How much are the different players, going to be allocated? And what sort of blend in terms of currencies as well?
Yeah, so, as you've rightly put it, I think there were fears that we're not going to come to the market, obviously, because of the high profitability that we recorded last year. But just to contextualize, of course, when you're looking at project financing, one of the things that you're thinking about is what is the optimal financing structure for the project. And also, what confidence you want to build in the market. So to start with, Wallace previously were able to say 100% were able to fund it from internal resources, which we are saying we are actually funding 60% from our internal resources, then 40% of it coming out of our existing facilities that we already have with the banks. But now, remember, we're coming out of a drought situation, which adversely impacted us from the cost of electricity. Think about also the inflationary pressures that we've all been facing. So out of that, we've obviously, after doing our cash flow projections, we've actually realized that we're going to have some working capital gaps. And so that is the financing that we need from the key stakeholders. But if you look at it from a broad or an overall, as Zambia Sugar, what we're also saying is that we're not going to the market asking that the market fully funds the project. We are showing our level of confidence that we have in what we're doing by putting our skin in the game. And we've done that by saying 60% we are funding it ourselves because of the confidence that we have, and also because of how strategic this project is to our mission as Zambia Sugar. So given all that, that is a consideration that we are sort of putting through for us to come up with how exactly we are going to fund this. But also, you see, we are also a nationally strategic institution. We are listed on the Lusaka Stock Exchange. So that also means that we also have a moral obligation for us to be able to support the local market. And so that's why you see, for example, the main contractor on the project is actually a local contractor. That is also part of us making sure that there's the sharing of the benefits that come with such big investments that we are doing. But also for you to be able to convince the major shareholder who's across the border, who's across the sea, to be able to entrust you with 2 billion, given obviously the tough economic challenges that we're facing because of the drought and all the debt issues that the government has been dealing with, is again another major milestone. Again, it speaks to the confidence that our major shareholder also has in Zambia Sugar, also in our project execution capabilities. So given all that, then we made the determination that yes, as much as we're able to use our existing facilities and also our internal resources, let's also find a way that we support the finance by bridging now our existing gap, which is coming out of the impact of the climate change. So with that kind of change, then we said, okay, we are going to go to market and we'll be looking at 700 million coming out of the market, which is a 40%. But also remember that the other aspect to all this is the fact that we still have other ongoing projects. So currently we have the falling frame of operator project, which is meant to enhance our efficiencies in our production capacity. But we also have other core capital projects that we're embarking on, which also require cash resources and which also have been impacted by the climatic issues that we've been facing. So all that, we've put all that into consideration. But also remember that because we have shareholders that we need to make sure that we continue to give a return to. We do not want to end up in a situation where we constrain that. That's a very important relationship that we need to continue to give back a return to. So all this is in the context of assuring returns to our shareholders, but also making sure that we do the necessary reinvestment so that we build the Zambia Sugar for the future.
Absolutely. And you know, when you say reinvestment as well as looking after shareholders, does this mean that, you know, dividends will still be an option going forward?
We have an obligation, obviously, to take care of our shareholders. And the primary ways that we take care of our shareholders is by giving them a dividend, also through other means such as the capital gains that they get whenever our share price goes high. So our expectation is that, obviously, with such pronouncements to the market, that they will start pricing in these long-term returns that are expected out of the project into the pricing, so that the shareholders can get the necessary capital gains that come out of such huge investment. But also, it is our job as management to ensure, and as well as the board, to ensure that we continue to give a return to the shareholders. So all this, as much as we would want to use our internal resources, but because of the other obligations that we have, and for the purposes of sustainability, we need to make sure that we balance that. And this is where all this is coming from.
Absolutely. And speaking of return, the internal rate of return for the project is about 26. Are you able to just walk us through how significant having an optimal capital structure like this, as well as there was also mention of the sort of tenor of the financing and stuff. Are you able to give us some more detail on that?
Yeah, so remember, one of just working out of his principles is that we would never invest in a project that has got negative returns. So this project has got a positive net present value to start with. It's also got a very high return on investment, which is around 21%. It's also got a good return, internal rate of return, which is around 24.5%. But if you benchmark that, because if you're a shareholder, for example, you're asking yourself, if I have an internal rate of return of 24%, what am I benchmarking against for me to be? So if you are to just do a simple benchmarking against the cost of the funding that we're going to get, because that gives you the immediate and the easier kind of benchmark to look at. We're thinking of the kind of partners that we work with, those that are able to assure the return given where our internal rate of return is. So those are the kind of things that we expect. That we spoke to the banks, we've given them all these details, that even when they structure their proposals that will come to us, their quotations that will come to us, they will be thinking in those terms, so that we make sure that we preserve the profitability and the return that we need to give back to the shareholders.
Absolutely. And on a final note, you know, obviously you joined the company, you know, circa 2 years ago. You're now in project stage. How has the adjustment been for you now from coming in comfortably, very profitable company, but then all of a sudden to be, you know, thrown into the deep end of structuring a capital structure such as the Twazabuka Project?
Yeah, I think it's interesting, to be honest. Also, given my background, the banking background that I have, and if you listen to the conversations that we're having with the banks, really it's just to be able to bridge the financing gap that is existing, but also being able to get the best kind of financing for our shareholders. And so, given that we've shown our commitment, that we've got the skin in the game, we're now asking the parties to come and it's not a long-term kind of loan that we're looking for. We're looking at a 3-year financing. So that is very short term if you think about it. The project is going to take about 20 to 24 months to completion. We're expecting that by November 2026 we should have completed the project. But we are saying we need funding that will be able to outlive that, because remember, we're dealing with all these things that I've mentioned, but also that this funding is not tied to the Twazabuka project. This is meant to bridge our working capital needs, and also making sure that we're still able to sustainably give a return to our shareholders. So it's out of that balance that actually we've structured this, and it's actually a good experience to be able to deal with such a big project that has got an impact not just at Zambia Sugar level, but a national impact. Because think about all the benefits that are going to come in terms of the fiscus. There will be increased tax contribution that will come out of there, because we are going to have importations, so there will be customs duty that will be paid. That we also have domestic taxes that will also increase as a result of the project, because we have many local suppliers that will be participating. We have employment opportunities that are going to come through, and our estate support director also spoke about things like lodges, the hospitality industry that will have to flourish within Twazabuka because of the scale of this project. So all these are exciting terms, and we are happy to actually be part of the big companies in Zambia that are actually contributing positively to the nation at large.
Absolutely. Hezron, thank you so much for speaking to us, and we look forward to getting more updates from you on the Twazabuka project.
Thank you so much, Mwelwa. See you.
That's been Hezron, CFO at Zambia Sugar. So stay tuned for more insights as we continue to follow the Twazabuka project by Zambia Sugar. I have been your host for this special episode, Mwelwa Kenneth Chibesakunda. Get to know.